I had not married Beth, there's a good chance I'd have married Debbie Gibson back in the day. We never got together. All right, welcome in, everybody. It's just kind of a yucky Monday. I mean, not outside. The weather's kind of cold, I guess. Beth's been out in it a few times. I've sent her out to do some chores here and there. Not taking the kids to school. All right, so what we got going on here? AD is anemic at 27. The AD has made new lows recently. Now we're in lunchtime chop. Where's our little bitty first 15 minutes all the way up here, y'all, from 85 to 92? What's that, 7 points? So that's really small. What is above us to keep us from going up? We got the overnight high. We've got the top of the 15-minute range. We've got cash open. We've got VWAP. We've got the lower band of the opening 15 minutes. And we've got, I said VWAP, and we've got the hourly mid band all above us. What do we have to catch the falling knife? We've got the overnight lows and a pivot point and nothing else. You know what that means, right? You're looking at the last 30 minutes of the day and you want to go into a little day trading. What does this mean? That means we're probably going down, right? Because we've got much more resistance up above and not a lot of support down below. So I get that right about 50% of the time, which is pretty good, right? All right, what else going on? Well, I had a little volume spike right there. Anything else that just looks, standing out at me? So we're down just a little bit. Okay, and then we had the NQ. Let's pull up NQ over here. NQ is doing worse, 0.34, which would mean our TQ positions are probably down 1%. So just kind of a yucky kind of day. That's kind of the way I feel anyway. Just kind of yucky. All right, so let's see. Let's go to our other weapons. See what this looks like. Let's look at the E-minis first. Well, I'll be dog. Who would have thought, right, that we would have some interaction on that 80% line? Indeed we did. And now it's coming back into the fairly priced zone. So, what's the outlook for the next couple of days? I would say it looks like this. Since we are at the point of control here on volume profile, here's our little probability cone. Looks very neutral to me, right? Very, very neutral because we are at the point of control. Just we'll fill in this for the next couple of days. Now, we could easily see a pullback down to the 50% line. Oh, I went too far. Down to the 50% line. Okay. But, I would say neutral to bearish here. Neutral to bearish over the coming days. That's kind of our outlook. So let's look and see what our little NQ friend looks like. NQ. This looks like. I watched Fight Club over the weekend. I had not seen that since I was in the hospital back in 2009. First rule of Fight Club, don't talk about Fight Club. That's really a good movie. I really like that. It just made me want to punch somebody. Punch. I'm a brawler, not a lover. All right, where we go. So same thing here, right? Point of control here on NASDAQ. We got the value area high, value area low. So I would think kind of the same thing here, kind of a neutralish to a slightly bearish look for the NASDAQ the next couple of days. All right, that was good. So then let's go look at our skew driver. Skew driver is going for about, I think, 48. Let's see when it goes. 520, 520, 520. I'm waiting for 520. 520. 520 is 44 down. All right, 44. Let's see what that looks like. 44, same as Friday. Okay, we can do that. So 11, 15, 21, 44. We had the guy to come and tell us how he's going to clean our house before Thanksgiving. Oh my gosh, that would be a bunch of money. It's $300 for the deep clean, right? But that's going to be well worth it. I mean, and I just told him, we were like, look, I got 5 kids, they destroy everything. Oh, JoJo tore up the kitchen door over the weekend. And our cabinets are all falling off. It's just, they hang on them. It's just, I know they'll grow out of that one day, but I mean, they tore up the doorknob. We cannot even get out of the kitchen door now. So I got to figure out how to replace that. And then they're going to clean the house every week for like $150, which is not bad if you think about it, because our house is like, I don't know, 3,500, 4,000 square feet. It's got 6 bedrooms, 3 bedrooms. You know, it's kind of big, right? And so that's not too bad. He said it's going to take them 6 hours on Saturday. They're coming Saturday. So it's going to be really interesting. All right, so what does this tell us? Our skew is the same as it was, right? And so, you know, this is, I'm telling y'all, it's just amazing that we can't get back into the average 25 to 35. So, you know, we're neutral to bullish on the market, on the SPX here. You know, if we'll ever get back into is this the new average? Maybe this is the new average. I don't think so. I think this will normalize at some point. So that's fine. So our skew is what our skew is. All right. So I'm going to show y'all some cool new stuff I was working on over the weekend. All right. So what am I doing now? All right. So let's go look at our Greekies, our little Greeks, Bob. How's your Greeks doing? Well, let's see. Let's see how we're doing here. How's the old Greeks doing? Let's take off our groupies. And let's just see. So we're positive delta, we're positive theta, we're positive vega, which is all nice. Now we're down $723 on the day. Now remember, this is not for the faint of heart. You're going to have some swings. We're going to swing it, baby. A lot of stuff we have, we're going to say big ups and big downs. How many times have y'all seen us up over 1,000 in a day? You know, you're going to see me down probably 2 or 3 grand in a day. It's going to happen. But is there really any need to do anything or to, you know, no, because I'm waiting on signals, right, to tell me when to buy or when to do something. Let's see. Let me open my TV. See if I don't think we've got any signal at all, but I'll try to open it. Let's see, where is it? The AIM Empire. Don't update. Oh, that opened quick. Did y'all see how quick that opened since I deleted all those spreadsheet parts of it? How about that? What'd you say, Beth? You better not be talking about behind my back. Put up with it today. All right, so that opened quick, man. I love that. So we got no signals today, right? So if we had not sold any options, we'd be up $7,208 since October 15th. But instead, we're only up $3,289 as of Friday. But that's still good, Joe. Really good. All right. So no signals on that front. So is there anything we need to do? Well, let's see. We got positive theta. That's good. We got positive vega. That's good. And we got positive delta. So what's causing our problems today is probably our TQQs, but it's not causing that much problem. Look, TMF is giving us problems today. It's down 206.02. We're not used to that, especially when our TQs are down. This normally is up, so it's fine. So here we're down 385 on that, but that probably means that my covered call that I sold is doing good. Yeah, look at us. We're up $67 on the covered call. Now kind of makes me wish I'd sold 2 of them. Oh well. We may sell one later in the week if TQs go back up. We'll see. So we got 221 shares of TQs. We got 205 shares of TMF. And, you know, it's kind of like, you know, I don't look at my 401k or my thrift savings plan with the government. I don't look at that often. And there's days that thing's down, you know, multiple thousands of dollars. You know, and it's just in ETFs. You know, it's the same thing here, right? I mean, we want our net leak to go up over time, and it appears to be going up, but it's not something that I'm, you know, just like, oh no, this down today. You got to get out of that, right? You got to look at your forest. How's your forest doing? My forest is good. We want to be bullish, our TQs, and we want to have positive theta so we don't have a theta drag on our account. And being, you know, positive vega is just brilliant. So it's not a lot to do. So the good thing that we will do today, though, is we will do us another 1-1-1 trade. Why the 1-1-1, Bob? Well, because the market's down, and that's where we get that up. Now, we've replaced the daily selling the 10 delta micro put in the /MES with doing the 1-1-1 trade, which I just like so much. Why do I like the 1-1-1 trade? Well, let's see. The last one we put up is already up $60. What, man? I have two 1-1-1 25s. This one's up $27. Oh, let's see. Micro BSH. This one's up $155. This one's up $253. See what I'm saying? These things just work like charms. That one's up $67. That one says it's up $1,200, but we know it's missing one of its components, right? So we're not so worried about that. So where's another one? 16 up $164. I mean, it's the best trade on the planet that we got. Oh my gosh, we got one that's down $123. I bet it ain't got all of its components in there. Exactly. It doesn't have all of its components. Where's its component? That's the only reason it's down. Let's see, 1-1-1-18 up $197. So it's really the strongest trade that we've got is our 1-1-1 trades, and we're going to show you how to put one on. Just looking at everything. Now we were down $700. Now we're only $5 down. Don't worry about it so much. All right. So what do you do when the market's down? When the market's down, you do an MES trade. So here we go. We'll go MES. Start futures. We'll go to trade. We'll go closest to 45 days. Ta-da! We got a 46-dayer right here. All right. So what do we want to do, Bob? What do you want to do, old pal? Well, you're going to do a long put vertical, and we're going to do one that's 50 points wide. Everybody see that? 10 to 60 is 50 points wide, and we want to do it to where this is $10. We want to pay $10 for that. All right, so let's move it down. Rolling in the river. Roll it, baby. Now, here's where I don't like it. Time shots off. We're going to fix this because this gets hung up. Watch. See, look, it gets hung. I don't like it getting hung. I remember William Hung from She Bangs. Let's just move it down a little bit. It's going to be weird because I don't want to. Well, I guess I could sell where I've already sold, right? Yeah, we can do that. So 50 points, 1075. Let's go down one more, Bob. 1025. One more. 562. There we go. That's $10. So what do you say we do? What, 2 contracts of that? Because we have to do them separately over here in the old Tasty Works. So let's go activity. We'll go up a quarter for that more. Replace order. Man, it ought to fill. Come on, fill, baby. We'll move it to 10 quarter. There we go. All right, so we got that sold. So then we got to go in and we got to pay for that, right? Anytime we buy options, which we just bought a spread there that gives us a 4-4 there, then we got to go down and sell something to pay for it. So if we paid 10 1/4 for it, we want to go down and buy something. This is interesting. Look at this. Look where we were selling, and now I'm having to come up here to sell something for 20. So you want to sell one for $20. So we want to do that. 2 of those, right? Same number of contracts. Sell it for 20. All right, anyone got a question about that's an entire single trade. All right, so let's go and let's put that trade on in our swing. I just love building the trade in Tasty Works. It's so much easier. So we'll go over here and we'll do a little analysis of it over here so y'all can see what it gives us. So we do this when the market's down. We do it in MES. I said we do it in MES. Oh, I can't wait for Thanksgiving. So we're having a boatload of people over after the engineers get finished with the cleaning, the hazmat uniforms they're coming in on. Okay. All right. So what am I doing here? So I've got to do the 45, 60, 45, 10 spread. 45, 60, 45, 10. 45, 60, 45, 10. All right, see, I've already bought some here. So you're going to go click on this, you're going to buy the 45, 60. You got to hold your little control key down. And then we want to sell the 45, 10. Everybody with me? and get $10 debit, and then go down, and we can do it as one order here. Then we want to go and sell the one that's going for around 20 bucks. So we've got 2025 here. Okay. So why don't we do 3 contracts over here? Let's take on a little more risk. If you're not willing to take risk, you're never gonna make money. It's just a sad reality. All right, now let's what do you say we analyze this trade? See what the trade gets us. All right, there she is. Rainy days and Mondays. Let's see, hide position. So you just see that's what it looks like. Look how cool it is, y'all. So if the market goes up, we make $150. The market goes down, we make $150. If the market goes really down, we could make like $900. Y'all see that? At expiration. If the market goes down too quick before the expiration, then we can start losing money. But remember, we've got black swan hedges that lift this up on the downside. So that's why we love this trade so much. So it gives me a little positive delta. It gives me a little positive theta, and it's going to give me some negative vega. Oh no. Oh no. So what do? We route it. Maybe we route it. That's what we do. So we're confirming sends. So we're going to try to get a $10 debit. $36. Come on, little girl. There you go. There you go, honey. So let's go put that in our little group. So now we got this little booger, we got that little booger. So we're gonna put you in a 11126 add group since we got 225s. 11126. Now, why do we do the 111? Why, Bob? Show it again. And I appreciate all of y'all's comments like, Bobby, it don't get old. We just like seeing it over and over again. That makes me feel good. All right, so let's go to the curve mode. Let's look at all of our 111 trades, and let's just show you why we have these things on here. What are you doing, Bob? What are you doing? Oh my gosh, you demon, you. What is this? I didn't even get all of them. Let's get them all. Let's slash. Here we go. Let's just see this monstrosity of a profit mountain that we're building back here. Look at that. Now, do you see why we put these on? Because when you put a bunch of them on, watch what happens. You start making $1,300 if the market goes up. Yay! But if the market goes down, what happens then? Well, you can make upwards of $6,000. Y'all see that? The market goes down. So we like this. So you're like, oh, Bob, I don't know if I'd ever be able to figure all that stuff out. Hey, look, if I can do it, anybody can. Now, what do we talk about? We talked about we could take some risk off, right? So, all right. So, some of these down here, they're way out of the money. If you can close them because we sold these down here. Remember, all of these down here, that is the naked components of our 111s. We did these for $20, right? What can I close it for right now? 5 cents. Isn't that cool? I can close that for 5 cents. Now, do I need to close it for 5 cents? Well, not necessarily. I could let it expire. And the thing is, you got to make your decisions, right, on what you can do. But, if the market started really tanking, then I could take some of these out. And the cool thing is, because these are only 4 days to go, they're less risky per se than some of these up here. And it's got -1 on the extrinsic. So, I mean, it's not like it's really helping me. And now it says it's got negative theta. And now it went to 10 cents, dang it. Now it's at 30 cents, dang it. I should have closed it at 5, right? Let's see if I'm closing it at 5. Take the risk off. Hey, we're out. Look at that. Isn't that cool? So we just made our structure look so much stronger by taking that off. Now let's look at this one. Can we take this one off? Let's say close it. What's it going for? It's going for 10 cents. I wonder if I could close it for 5. Well, I'll be dang.
Well, don't forget your margin requirements went down, so you have more buying power to put on more spreads.
Yeah, and exactly what Ken just said. Look, now I can put on more if I want to, right? I can do more because every time I'm closing one of these little puppies, it's just helping my cause. Look at this, y'all. I mean, are we on to something or what? Let's see if we can get rid of this. Let's see, 13,303. Let's see if we can get out of this one for 5 cents. You kidding me? Nothing. Jack squat crap, nothing. Well, yeah, and that's the key. Just you can just kind of look at them and say, man, when that gets down to nothing, I could take them off. It may only have 4 or 5 days on it, but like Ken said, it's giving us more buying power to put more trades on and to do things. And you're taking risk off. Now you're paying what, 55 cents or something to close it, or well, on Hasty Works, there's no charge to close the option, right? So
No,
that's
there's clearinghouse fees.
yeah, which is I don't know, it's minor. So you got a few fees to do that, but pretty much though, I mean, I'm closing those, but at the same time, I'm really comfortable at this point with letting those expire, and saving the commission. But it's up to you. If you're sitting there going, man, I'm too bullish with my creeks now, my deltas are too bullish, we'll take some of those off, and that'll give you a little more negative delta, right? It's just a sweet, sweet little thing that we can do there. So that's kind of that's kind of what we got today. On a down day, there's nothing else to do but we can check how is our hedge doing? Let's check that. That's always good. So we go to ES, we go to vol step 4. We make sure this is at 15. And then we go hide simulations, single symbol. So let's see what we're looking like on the downside. Says here, if we're down 20%, we're going to be up 7,286 cents. But that does not take into effect the effects of the increased volatility that happens on the down button. So that's why we have it here, so we can see how much money we'd be making if the market crashed immediately on a 20% down move, and we would be up 94,000. Follow it over here, 95,177. So then I'm going to check my entire portfolio with my TQs and everything. And I do that one by going single symbol, and I go to portfolio, beta weighted. And we're going to be down $6,225. Oh, but on a 20% down move, that ain't bad. Plus, I can make adjustments on that as well. And like we're talking about, hey, I can increase that by dropping some of those naked puts in my 111 trades. I mean, y'all, we got to plan for everything. So, what's my assumptions? We'll go back to my assumption. If my assumptions on the market is that, hey, we're fairly priced and we're neutral going forward, there's probably no need. If I don't think we're going to be way down here where my little micros are, probably no need to close them. Just let it go. So, we'll watch it. We'll watch it. So isn't that cool? So, you're sitting there working the 9 to 5 grind, baby. And you hate your life, you hate your job, you hate your whatever, you hate your dog, you kick your dog when you get home, you're miserable. And then you can do this while you're on your bathroom break. I'm cool, right? I'm cool. So, yeah, maybe you need to invest in a little laptop or something. If you don't want to get on the boss's computer, and get you a little hot spot. Use your phone, go out to your car during lunch break, that you can do this. I just didn't know how many people was unhappy in the United States, y'all. I tell y'all, it does not do me good. It's like my mama. Back during the day, my mom would watch the Phil Donahue show. Phil Donahue was out before Oprah was out, and before what, Beth? Yeah, I know, I'm aging my stuff. Beth, do you not have some house cleaning today? Jeez. Hey. Right. So let's see, she's not scared of me, All right, you made me forget my thought. Oh, Phil Donahue show. Before there was Geraldo Rivera, and before there was what's the guy? Jerry Springer. There was Phil Donahue. And my mama would watch Phil Donahue, and she just gets so upset. Man, I talked to her on the phone, and my mom would be telling me about the Phil Donahue show and everything that happened on there. And it was almost, she's like in a tizzy. She could not help herself. And that's the way I get when I start reading Reddit and the anti-work people. I go, they are miserable. no wonder everybody's burning things down and crashing buildings everywhere. Everybody in the moment is miserable in this country. Never seen such. You know, here I am, happy as a lark. You know, things going on. Anyway, all right, so what was we talking about? So we know what our assumptions are. Now, I was going to show y'all something that I found over the weekend. So really not much trading to do, right? Just let the thing do. I tried to email the guy too. I tried to email this dude. Let me show you. So oh no, what the crap. Now, let's see if I can show y'all the paper I found over the weekend. So I found this paper, right? Which was cool, kind of cool. And I shared it in our chat. Let me share it again with y'all. See, I'm getting here. I'm gonna try to read this. I thought it was cool. Remember, I said we're not changing the plan at all. I'm sharing this so y'all can see this. But I want to make sure we've got the best trigger possible to tell us, oh, look, Bobby, it's a bad time to be in the TQs. Is there a time that we should switch to cash or bonds and take some off of the TQs, you know, because it's a risky thing that we're doing here. And we got a hedge and we got all that. So I found this. It talks about the giant pouch rats of sub-Saharan Africa, large muroid rodents. And what they do is they train these little guys to go out into minefields, and they are able to find the mines. Now, fortunately, these little guys are light enough that they don't set off the mines. And it's really, really cool, right? So these are little hero rats. They call them hero rats. So the abstract here said, hey, we were going to see if we could find a hero rat that would sniff out landmines in the market that kind of gives us an idea of when danger is close, identify the mine, and then we'll switch from SPY or whatever market ETF we have, and we'll go down into bonds or we'll go into cash. So the one that I was really, really interested in. So what they're doing is this. They're taking the short-term volatility and they're dividing it by the long-term IV. Okay, so you take short-term, divide it by the long-term. So let's look. They tested out a different number of these. The one I'm particularly interested in and would like you guys to look up is the VXST, which is the short-term volatility divided by what you and I use anyway, the VIX, right? Which is the 30-day volatility. So it's taking a VXST, which I think is like a 9-day volatility, and it's dividing it by the VIX. Now, this was kind of cool. So they came up and they did this little switching strategy. I'm going to show you this. Which one is this? Anyway, they did a really, really good job. So you see the little yellow line? That is if you were, 100% in the SPY. But look what happened if you went into the switching strategy. You greatly outperformed the SPY. Now see that? Now, here's the daily tracking of the number. Now, here's what I can't figure out. And I tried and I'm sitting there going, what are you guys doing? So here it is again, showing us if basically this one didn't perform, but what I wanted to show you on, here it is. So the VXST divided by VIX, it has a low threshold and a high threshold. But he didn't show me, or he doesn't tell how to come up with the threshold. So let's look at this. VXST, he said, had a low threshold of 1.01 and a high threshold of 1.13. All right, let's see that. So if I'm looking at here, this is 1.2 something. So he didn't use that as a threshold. He said the lowest threshold was 1.01. Well, right here it's 1.02. So where's he getting the low threshold? If you go down here, that's under 1. So I'm not exactly sure how old boy is coming up with his threshold. His paper is unclear on that. So what I did is said, I emailed him and said, hey man, Sweet Bobby here, and we'd like to know how you're calculating your thresholds here, because I just don't see it. I really don't see it. So what I did was this. So I looked at this and I took his stuff And I do this, I spreadsheet it. So here we go, through November the 12th, I took the VXST, the VIX of each day, closing prices. And then I did his little, VXT divided by VIX to come up with this little number. So then I did a median 5. So this is the median. He talked about a smoothing factor. So I use the same smoothing factor to say, okay, what is the median value of this ratio for the last 5 days? So I said of D2, 3, 4, 5, and 6, what's the median? So that's different than the mean, right? That's the one that's in the middle. So that's how he did it. So he got the mean. So then I'm going back and I'm trying to figure out how to do a threshold, and I can't figure it out. And any threshold that I use, where I did 5 days, I did 30 days, I did all time, and every time it goes, it's recommending a 50-50, of your driver, which would be the SPY versus 50% of bonds. So now I've got another idea. So what I'm going to do is this. I'm going to take the lowest 30% of these. So I'm going to take the lowest 30%. So of all these numbers, right? All of these numbers of the DDDD, I'm going to take the lowest 30%, and then I'm going to take the average of the lowest 30%. And I'm going to make that the low threshold. I'm going to try this, right? So I'm going to make that the low threshold. Then I'm going to take that's minus. I'm going to take the greatest 30% of these numbers, and I'm going to make that, get the average of the highest 30%, and I'm going to make that the high threshold. But what I want to do really is see, and what I did is I downloaded the data. I want to see what happened back in February and March of 2020. That's what I want to look at. I want to see, would this have saved us the headache of going through the Corona crash? I just want to see that. Now, is this something that we're going to use or add to the program? Nah, probably not. But it's just, for if any of you guys are like me and you're, data nerds and you like to, check this stuff out, I probably need your help to do this. Any comments on this at all? I just thought it was kind of cool, right? If there was a way. Now, what are we doing now? What are we doing now to figure this out? Let me show you what we're doing now. So right now we're doing trading view. Here's what we're using. We're using the 200-day moving average. I say we're using the 200-day moving average. Hold on a second. Let me check. Of SPY, right? So here's SPY. SPY looks clean. Everything looks clean here. We're following SPY. Yeah, we're up at the, we look at the linear regression channel. Linear regression channel's up. We think this is still bullish. Yes, there may be pullbacks within the channel for SPY, but we are above the 200-day moving average. So remember that this is our trigger. If we get below the 200-day moving average, that's our trigger right now to say, maybe we need to go into bonds totally and get out of the TQQs, right? So that's what we're doing now. Now, I'm going to say this as well. I think, let me get this one up. I think, low chart, I think I got it here. 10-month SMA. All right, I think that the 10-month simple moving average is going to be the better choice after my little research over the weekend, right? So this is a 10-month simple moving average, and I can point y'all to the research that said this was a little better than the 200, and they're about the same, right? So if you want to, if it's easier for you to use 200-day moving average, use 200-day moving average. And then further, I think it is going to be to the point that we're just looking at this once a month too, right? On the last day of the month, last trading day of the month, look at this. Are you above or below? That way we don't have so much whipsawedness going on, right? We don't have all this whip going on. So we'll look and see. where we're at. So clearly at this point, well, depending on where that was, this is a monthly chart. There were a couple times when we should have been out of the market, and incidentally, that would have been that March 2020 crash. So these are the things we need to look at. We just want to make sure that we're refining the trigger. Is there a trigger that tells us that it's beneficial to get out? Now, keep in mind that we've got a spreadsheet that gives us some really cool stuff that tells us that, hey, when you're down, we're going to buy more shares. So if I did get out of TQQ, I don't think I would tell my spreadsheet that I'm out of TQQ. I think I want my spreadsheet to think that I'm still in it, because guess what? Even on those times when we're out and we may be totally out, I still want to take action when the algorithm tells me to buy additional shares. So it's kind of like we're gonna trick our spreadsheet a little bit. Spreadsheet's going to think, hey, Bobby, you made $7,000 in 20 days, you son of a gun, or 30 days, whatever we're doing. Yeah, we're 30 days exactly today. If you hadn't done anything but done your allocation, TQs, TMS, you'd be up $7 grand, pal. But you have to trade options, Bobby, because you're Bobby Genius. We know how Bobby Genius complicates everything. But when this thing starts going down, yeah, I want to accumulate a few shares on the way down. So if you don't want to worry about the 200-day moving average, that's fine. You don't worry about the 10-month simple moving average, that's fine. If you don't worry about the, what kind of rats we talking about? Hero rats, that's fine. That's just fun stuff for me. I mean, I got a bunch of time on my hand, right? So I got to have something to fill my time. But I just think that this article, and I shared it with y'all, is really, really cool. They said, hey, we greatly outperform buy and hold by using, look at this little thing. SPY buy and hold is here. And then look at this thing. It's phenomenal. Just got to figure out, I wish this guy would email me back. Maybe we should go to his house, figure out where this dude lives and say, look, dude, how did you figure out your low thresholds and high thresholds? So that's the only idea I had. Yeah, it is neat, isn't it, Enrico? It's just kind of, you look at these things, and now I like it because they kind of named it after the rat, right? The hero rats. So I'm always looking for white papers and things, different things to, add. I don't want to add any other trade though. God, I'm finished. Let's don't add anything. I don't care if somebody introduces us to the next greatest fund, the next shiny option. I'm tired of it. I don't want to look for anything else. We got enough trades. We got trades that do everything. We got hedges, we got income trades, we got calendars, we got all the stuff that we do. So let's just stay the course and try, just I think maybe refine our trigger. What's our trigger for getting out? But so right now we're fine, right? Down 753, we're good. Count's doing really, really well. All right, questions at all? So if I can get y'all in there snooping around with these rat stuff, and I'll be working on the rat. I don't know if anybody wants this spreadsheet or not. The one where I downloaded the data and I'm doing the smoothing and all that. See, I'm trying to figure out a way that it'll go over here and go, hey, Bob, you need to be 100% TMLs. You need to be. So here, if that is greater than that, TML. If not, it's TQQ. And if not, it's 50-50. So right now it's saying all these are 50-50. Well, that's not the best optimization. So I got to, and when you are doing things with data, it's easy to curve fit data to make it what you want it to be. Now, the cool thing about, oh boy, that did the hood rats thing, he went back a good bit of time. How far back did he go in time? You still curve fit going way back in time, but let's see what he did here. Where's his little graph? This is 2011 to 2013. Yeah, I think old boy I think he did this back in 2013. So let's see, 2011 to 2013. What would happen over a longer period of time? So there's a lot of testing. Here he went from 2008 to 2013. So he wanted to get the collapse. We see this here, right? That's where the collapse happened, I guess 2008. See that? The SPY all by itself was down, but look what the hero rats did. Hero rats was down a bit, but look, it was greatly above what happened here. And then it just Boom. So we'll look at the hero rats and we'll see if there's anything. Okay. Oh yeah. Okay. Yeah. Okay. You want it? I'll say, so let me, it may be a point I can share this. Let's see it. I'm gonna call this, let's save it as, save this as hero rats. All right, there's our hero rats. And then let's check. Can I add a file here? Because this one should be missing. Hero rats, Dropbox, Google Drive, your computer. Let's see if I'll let me share it here. Probably. Give me just a sec. Hello. What is wrong with you, Bob? What's wrong with you, pal? Here we go. Hero rats. Disk error. Cannot be seen. Is currently in use. Close the file and try again, you tubby son of a gun. All right, let's try that. Hero rats. Your computer. Hero rats. There. I just shared it with you. That's kind of cool. I'm glad it wasn't too big to share with you. So if y'all will, you know, I hate to say, hey, we got homework, but I want your, so everybody get that out before we stop, because I think after I close it, our little chat, we won't have the hero rats file anymore. But any questions on that? I just think it's cool, right? Is there a switching mechanism that will help us to know, hey, bud, you probably need to get out of TQQs. There's danger, danger, danger ahead. Now we've got hedges, we've got all that. So I don't know. Do we need to get out? I don't know. It's up to you too. I just want to say, if we've got a trigger, I want to have the options to get out, right? I want the options to say, hey, it is dangerous. Why would we want to hold TQQs in an extended bear market if there is a trigger that will tell us when to get out? Okay, let me stop the recording.